Bola Limited, Tanko Limited, Eze Limited. All figure assuming to be correct. Additional information on
Okay. Can you hear me? Okay, I hope I'm sharing my screen. Am I sharing? No. Ah, I thought I was sharing. Sorry, okay. Um, Sharing the entire screen. Have you seen it now? Can we see it now? Can we see my screen? Okay, someone has said yes. Mr. Suleiman, you can lower your hand. Okay, all right. Now, in the question, right, we have what was it called? So we've done the group structure, right? And in our group structure, what do we have there? We have the group structure to be Benga purchased 75% in Tanko, making Benga the parent company, right? And then also purchased how many percent? 30% in AZ, right? So that's it. Now, also for the net assets at the date of acquisition, we computed the net asset at acquisition to be 19,000 at date of consolidation given to us at 25,000. Then post acquisition profit is here. Then for acquisition for Bola to AZ as well, we have that. And for uh, at the date of acquisition and at the date of consolidation, we have it there, right? So these are the things we have under it. Then also we have our goodwill. So we're completing our goodwill last week before we went to bed, right? And we have our purchase consideration given to us, right? Am I right, please? Am I right? So we have the purchase consideration given to us to be 23,000, right? We have the fair value of NCI to be 4,969 at the date of acquisition, right? Hello? NCI at date of acquisition, and that is 19,875 multiplied by 25%, right? Am I right? Hello, this times 75%. No, is that what we got? No, we got 23,250 at the date of acquisition. Oh, that's purchase consideration, right? The NCI at the date of acquisition is this multiplied by what? 75%, right? And that's 14,906. Is it 906? Was it 906 we got earlier or 969? How did we get our 4,969? Fair value of NCI, was it given to us? Dollar to Tanko, right? Dollar to Tanko, right? Okay, so what is dollar to Tanko? Dollar is 19,875, Harry, and 25% of it. So what did I do before? I'm coming. Yeah, I'm coming. Oh, I wrote 75 instead of 25. Yeah, okay. So that is 4,968.75, right? So, and I think we rounded it off also. All right. Then also we rounded it up. Yeah, that is round up, not round off. Then also we have what again? Our net asset at the date of acquisition to be 19,875. Yes, sir. Go ahead, sir. Okay. So the 4172, there was an information on what's it called, self impairment on that net asset on goodwill. There's an information 8. There has been no impairment for Eze Limited. However, the impairment test conducted on Tanko Limited's goodwill showed that goodwill is being impaired by 10% annum on a straight line basis. So what is the 10% per annum of this our account? 10% per annum. We purchased it in 20 what? When did we purchase it? When did we purchase Tanko Limited? We purchased Tanko Limited in 2014, right? So we have impairment in 2014, 2015, 2016, 2017, and 2018. That's 5 years, right? Am I right? So 5 years, 10% of 8344 times 5 years. Is it 3,000 or 4,000? Okay, now you know that this goodwill, we are doing it for 5 years, right? And like I said last week, that we can do it for 4 years, so that we take the impairment for this year separately into the account, the same way we did. What did we do that yesterday? I think it's this account, depreciation on fair value adjustment, right? Depreciation on fair value adjustment that we did. If we are doing this by 4 years, what will it give us? H3 4.4 times 4. That will give us 3337, right? Okay, now that's that. And again, don't forget, this is our impairment. Here is the question again. Impairment tests on goodwill showed that goodwill is being impaired on straight line method. Our goodwill is being impaired on straight line method, right? So that's why we colored this from goodwill down here. All right, so let's leave that goodwill. Now the next one we are going into is our consolidated what? Our NCI. Should we do our NCI now? So what will be the value of our NCI? We have NCI at acquisition, right? Computation of NCI. Let me use calculation. We are not in taxation class. Calculation of NCI, of total NCI. So what will be our NCI calculation? And don't forget, our NCI is still for Tanko, right? So what's the NCI? We have NCI at acquisition, and that gives us 4,969, right? What will be our post-acquisition NCI? What will be the post-acquisition NCI? Do you have any post-acquisition? We have our reserve to have increased, right? I don't know if you can hear me. Our NCI for post-acquisition NCI now, right? We have 10. Is it 30 or 25? Now, this 7, I'm coming again. We need to be very careful. Hold on. Right? This our, what's it called? This 750. Is it at the date of consolidation as well or not? We wrote it off at the date of acquisition. Right? Should we have any effect here? Should we assume that it was deducted at the date of consolidation? Because right now it's showing a post-acquisition profit of 750. I don't know if you understand what I'm saying. So are we saying we have this post-acquisition profit? Then also our depreciation on fair value adjustment. Depreciation on fair value adjustment. Yes, we have that at the date of consolidation. But do we have it at the date of acquisition as well? I don't know if you understand what I'm saying. Let's do our consolidated retained earnings. We'll come back to it. Let's do our consolidated retained earnings. Okay? So for consolidated retained earnings, for consolidated retained earnings, what do we have on our consolidated retained earnings? Yeah, retained earnings as per account. $16,875. Then what again do we have? What will be our post-acquisition? Hello? We have our post-acquisition retained earnings too, right? Now post-acquisition retained earnings, I'm coming. Will this one give me 25? No, of the parents now. Post-acquisition. And yeah, we'll come back immediately. Please, we are not coming back immediately. Come back after 10 minutes. Let me use that one to pray, please. After 10 minutes, we come back. Are we there? Are we there, please? So we'll come back after 10 minutes. So what's our post-acquisition? 5,850, right? Can you hear me? Okay, let's just go off and come back later then. Let's go and come back later after the class. After 10 minutes, please. After 10 minutes. Yeah. Okay. So May 2022, right? Okay. Now we are doing our consolidated retained earnings, right? We've not completed this NCI. We'll still come back to our NCI. Now consolidated retained earnings as per bank statement, as per balance sheet is 16,875, right? Then also we have post-acquisition profit. Am I right?
Yes, sir.
All right. Post-acquisition profit. Our post-acquisition profit is how much here? 5,850, right? So 5,850 multiplied by 75%. Abi,
Yes, sir.
this multiplied by 75%. That gives us
4,000
4,387.5,
87.5.
which is 388. Let me make it, yeah, 388. No, I can't put it like that. I want it to have that decimal point of 4388, right? Then also, what else do we have? We will have a share of profit from the investment in AZ. Right? I think we have that here. Am I right?
Yes.
Yeah, our share of profit, this is 1 million, and post-salvation profit is 1,050,000, right? This is in Tanko. And what about the one in AZ? We have post-salvation acquisition profit in AZ. And how much is that? How many percent did we buy? 30%, right?
30%.
So which
Yes, sir.
means this times 30%, which is 315, right?
Yes,
Am I
sir.
right?
Yes, sir.
Okay, then let's look at our accounts again. I think there was one, what do we call it? A transaction, intercompany transaction. Let's see if it is something that will affect the consolidated retained earnings, right? Anyhow, it will even affect the retained earnings. I mean, it will affect the consolidated retained earnings. It's just that we need to check whether it will affect both the parent and the subsidiary, or the parent only. Do you understand? But there is no way it will not affect, I mean, both the parent company and the NCI, or it will affect only the parent. Am I right?
Yes, sir.
Uh-huh. So where is that item? Okay. There's a 900,000 item, right? Are we there, please? Hello? Are we there?
Yes, sir.
Yes, sir.
Okay. So we have a 900,000 in respect of amount owed by Tanko, 550, owed by Tanko Limited, and 525,000 in respect of amount owed by AZ Limited, included in the receivables of Bola. They are owing us, right? This is not the intercompany transaction. Why do we have intercompany transaction? But this one that they are owing us, so the corresponding
Information, sir.
balances are under payables. So this one will be in the payables account, not yet. Then a
We have
component,
information number 6.
yeah, a
Information
component
6.
used by Tanko Limited and AZ Limited is produced by Bola. So if Bola is the one selling, that means it will affect only the parent. It will not affect
Yes.
the subsidiary, right? It will affect only the parent if the parent is the one selling. But if it is subsidiary that is selling to parent, then it will affect the profit of the parent as well as the subsidiary. The subsidiary first, right? So that is that. Now this component sells at a margin of 25%. A margin is profit on sales, right? Margin is profit on sales, right?
Yes, sir.
Okay. Now, this profit, they said that goods worth 780,000 were sold to Tanko during the year. None of these goods had been sold by Tanko as at 31st December 2018. Brother also sold goods worth 1.2 million to AZ, right? That 1.2
Yes, sir.
million sold to AZ, all these goods as at to AZ, and AZ
Yes, sir.
sold all the goods. Now, the one that AZ sold now is not an URP, it's not a URP, it's not a
Yes, sir.
URP or an unrealized profit because it's been realized.
Yes.
But the one we sold to, what's it called? Tanko
Thank you.
is unrealized, and 25% on sales, not on cost. 780,000 is the sales. Am I right?
Yes.
So which means 25% of 780,000. All of these goods have not been sold. Had it been 50% has been sold, we now say that the unrealized profit will be 50% of it. But the whole 25% on the 780 has not been realized, right? Am I right?
Yes, sir.
So
Yes, sir.
what's the unrealized profit now? So the unrealized profit will affect our retained earnings,
195,000.
right? URP, which is 780,000. Is it thousand or million?
Thousand.
Thousand multiplied by what? 25%.
50%.
And that gives us what?
195,000.
195,000. It's an unrealized profit, so it
195.
has to be deducted. Minus 195,000, right?
Yes, sir.
Uh-huh.
I think to the ordinary 195, since that we have 1,000 in.
1,000 up there, yes. Ordinary
Yes,
195.
yes, yes, yes.
Then also, what do we have next? Yes, going back to our account. Any other thing we have? Any other thing? I'm looking at the information if there's any other thing so that we don't miss it out. Mhm. Can anyone see any other thing there? Hmm? Is there any other thing, please, that we have not mentioned?
There is no any other thing pertaining to that consolidated revenue in that. So,
Are you sure? Are you sure? Are you sure? What about this goodwill impairment? Will it affect retained earning or what? Hmm? Will impairment affect retained earning or what? Or not?
It will.
it will affect it. We
It
are
affects
going to
retained
deduct
earnings
it.
now, right?
Yes.
Uh-huh. So impairment of goodwill. How much do we have it to be?
4,170.
4,000 what? 4172. Right? Any other thing? Any other thing? So in the absence of any other thing, that means we have what will be the total now?
Hello, sir. Can you hear me?
Yes, sir. Go ahead, sir.
I said, please, this additional information 7, the
Okay.
second part of it, I don't know if maybe you could explain that part. I don't know if it has anything to do with the adjustments you are doing.
Okay. So that one will affect receivables. So let's look at that additional information 7. 900,000 in respect of amount owed by Tanko and 500,000. Okay, I think owed by Tanko and what's the other person's name? AZ. In respect of and 500,000, 525 in respect of amount owed by AZ were included in the receivables of Bola. Is that what you want me to read?
Yes, sir. As in the explanation of that additional information.
Okay, now the two of them have been included in the what's the receivables of Bola? What's the receivables? We have it to be 15,000, Abby. So we are
Yes,
saying that
15,000.
from this 15,000, 525 and 900,000 are there. That do not belongs there, right? Now they are there, but they are owed. The receivable is from Tanko and Eze. Do you understand that, sir? The receivable
Yes, sir.
is from Tanko and Eze. Now, since it is from Tanko and Eze, what do we do? They now said that the corresponding balances in Tanko Limited and Eze Limited payables were 600 and 525. They were 600 and 525 in that of their payables. Does
Yeah.
that make a sense?
Yes, sir.
Respectively. Now, Tanko recorded 600, but Tanko is owing us 900, right?
Yes.
Tanko Eze is owing us 525, and Eze also has 525. On December 31st, 2018, Tanko Limited sent a check of 300,000 to us, to Bola. So that's the difference between the 900 and the 600. So Tanko sent
Okay.
a check of 300,000 to Bola. Do you understand that now?
Okay. Yes, yes.
Now, which means its liability will reduce to 600. That's what
Yeah,
reduce its
from
liability
900 to
from 900 to
600.
600. Now, once the receivables of this thing, Tanko, for 200. Do you understand?
Yes, yes, for
And
200.
the other person is 1,950.
Yeah.
Now, these receivables now, 15,000 of this amount, we need to remove intercompany transaction. The what's it called? The payables for Bola is 1515. I mean for Tanko. Am I right? 1515. And that of this man, what's it called? Eze, is 2,820. Is it trade payables and trade receivables? We also use receivables, so we assume it's trade, right? Now, in the account, the one that has to do with what's it called? Ordinarily, what's the name of this man? Eze, right? Eze is not a subsidiary. Eze is an associate. Am I right?
Yes, yeah.
So for our
Yes,
receivables
yes.
now, we have 15,000 for Bola. We have 4,200 for Tanko. Now the 15,000 of Bola and Tanko of 4,200. And the receivables now, don't forget, the two of them has to net each other. All intercompany transactions have to net each other. Am I right? Now,
Yes.
this 15,000, we received 300 or how much? We received 300. Am I right?
Yeah.
Now, that 300 that we have received, we need to remove we will add the 300 to our cash book. But you see the 900 that is owing us. The 900 that is owing
900 or
us.
600.
No, he was owing us 900 before, and he paid
Yes.
600. So it's two ways. Is either you remove that 600 and then not record the remaining 300. Because in our account we have it as 900. In his account, he recorded it as 600. Abi? In our own account, we have it as 900. In his own account, he has it as 600. That means I can remove that 600 from my account, right? Since he already has 600, I can remove 600 from the two accounts and then I ignore the 300. Or I remove the complete 900 from both accounts and then the 300 that he has paid, I include that. That means minus 900 plus 300, that is minus 600, which is what he is owing me, that is in his account. I don't know if you understand that. You don't understand. Does anyone understand what I've
Yeah,
just said?
I do to an extent. To an extent, I
Okay,
do.
so
But
this is
probably
it.
if we come to the consolidation
Okay, when we get to
and it's
consolidation, we'll
how they
explain
make
it.
it.
We'll explain when we get to consolidation. All right. Now we are
Yes.
still talking about our what's it called? Our consolidated retained earnings, right? So for the consolidated retained earnings, we've discussed. Where are we there? Any other thing? If we don't have anything else, please let's find our retained earnings. And the retained earnings is showing that we have 17,211, right? Let's complete this.
Please, I have a question.
Go ahead, ma.
Sorry, the NCI, was it value at fair value or at what?
At net
Because
asset.
at net, because I can see
For
that you are
portfolio.
charging the whole impairment to the consolidated. I'm expecting you to use 75%
No
of the
way.
impairment for the consolidated retained earning.
75% of the impairment. We are using net asset, oh, not fair
Okay, so
value.
we are going to take the full. So
Yes.
NCI is not going to take anything from this
No.
impairment,
No,
right?
NCI is
Okay.
not taking.
Okay, thank you.
Then we have share of post-acquisition profit, right? Share of post-acquisition profit. And what will be the share of post-acquisition profit? That's 30% or what? 25%. 25% of 5,000 times 25%. That's 1,462.5, right? Which is 1,463. Am I right? Let me check the post-acquisition profit if I had it together so that I don't do this post-acquisition profit. This is 5,851. No, one of them has to go down. So 1,462. 1,462. Do you understand what I just did?
No, sir.
No, this one had 0.5. Post-acquisition profit here is actually 0.5, 4388.5. I approximated it to, 4387.5. I approximated it to 4388. And this one too also has 1462.5. Approximated, and I brought this one down because if I had these two post-acquisition profit together, it must give me this 5850. Do you
Okay,
understand?
okay.
So that's
Yes.
why I reduced this one to 1462. All right. So what's this thing that we have here? We have it to be 6,431. That's our NCI. Right, 6,431. Then what else do we have? Any other thing? Eh? Nothing, right? So let's go into our consolidated account and complete this topic once and for all. Our next class should be on EPS, earning per share. So from next week we'll start with EPS. Now let's consolidate our accounts, right? Shall we? Shall we
Yes, please.
consolidate our account? Okay, so I think we have both income statement and statement of financial position to consolidate, right?
Yes, sir.
So consolidated income statement. Or how did the question write itself? So that I will not be doing my own. Consolidated
If you have the consolidated statement of
statement of profit,
profits
loss
or
for the
loss,
year
and other
ended.
comprehensive income.
Okay, I've copied this. Don't worry.
Requirements.
Yeah, I know. So what I'll do here is this match there. Okay, consolidated income statement. I'll remove this and then make it like this. I think this, yeah. Yes, go ahead and speak to us. Oh, it's not showing everything. Yes, go ahead, sir.
Consolidated statement of profit or loss and other
Other
comprehensive
comprehensive
income
income. Yes.
for the year ending December 31st, 2018.
Yeah, that's what we have here too. All right. So we have our uh, Naira sign. So what do we have in our accounts?
For the parent, we have 17,000, 17,000 and
For what?
70,
17,000 for revenue, bar.
70, yes, and
Okay.
70.
So someone should give me the figures. Our revenue. We have 17,070.
7,320.
070 plus 7,320, right?
Yes, sir.
Uh-huh.
Minus
Minus what?
intergroup state.
Intergroup
Intergroup state.
transaction, right?
Yes,
Intergroup sales, where we have the
yes,
unrealized profits.
yes, sir.
And that's the I think 780 or so. The one
Yes, sir.
that Stanco has not sold, 780. So minus 780. What would that give us?
23,610.
7320 minus 780. 23,610. Okay, what
Yes.
else do we have in the question?
Cost of sales.
Cost of sales.
Yes, sir.
So what was our cost of sales now? We have
The two- 8,000.
8,640 and
Yes, sir.
3,210, right?
Yes, yes, sir.
Okay, so we have 8,640 plus 2,310, are you? Is it
Yes, sir.
2,000? 3,210,
3,210.
3,210, right? We have intergroup transaction as well, right?
Yes,
Minus
sir.
780 plus unrealized profit of how much?
195.
195, right? Plus 195. And that gives us what? Equal
Please, sir,
to,
why are we adding unrealized profits to cost of sales? Sorry, I'm asking this. I didn't join the previous class.
okay, so unrealized profit is that, don't forget, under the sales, this is the sales value of that item, 780, right? That's the value, right? Hello, sir.
Yes. Yes, sir. Yes,
So
sir.
if that is the value, then the 780 has to be deducted as well. The profit element, when you remove, what makes revenue is cost plus profit. I mean, yes.
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 So when you remove the profit element, it will give you the cost of that item. Do you understand? When you remove
Yes.
the profit element of sales, it remains the cost. So it's just like saying that 780 minus 195 is what? That's 6. It cannot be 680. 665.
585.
585. Now that
Yes, sir.
585 now, I can just say that 8640 plus 320 minus 585. Do you understand, sir?
Okay.
Uh-huh.
Okay. Okay.
8640 plus 320, 3210 minus 780 plus 195. That gives us 11,265, Abby. After the cost of sales, we have the gross profit, right? Gross profit. What's our gross profit here now?
12345. 12345.
Okay, 12345. All right, that's our gross profit. Then the next is what? Other operating expenses. What are the other operating expenses we have?
For the parent, 2,070.
Uh-huh. For subsidiary, we have 810.
Yes, sir.
Abby,
Yes, sir.
okay, do we have any additional information that could fall into the case?
Yes, sir.
Okay. What are the additional
So,
information?
additional information through under the
The
leasing
lease.
item. Yes, they were
Uh-huh.
saying that the operating expenses are Bola Unlimited treat this as an operating expenses because the only accounting entry that the company believe must be made in relation to this asset
Is
is the
300.
300,
300,000
300,000.
payment that has been made. Whereas this is not meant to be in other operating expenses, right?
Yes, sir.
So that means we need to remove this 300,000, right?
Yes, sir.
Uh-huh. After removing the 300,000, any other thing?
I think we still have other some.
What else do we have?
There was of that depreciation charge on that lease, on that
We,
right of assets.
Sorry, sir,
we,
I'm not clear about this 300,000 as in why we are
did you
removing
join the
it.
last class, sir?
Yes, I was in the last class.
You were there when we started this question, when we did the lease. You were in the lease class.
Yes, I was, but my network was fluctuating then.
Because it's like you saying that we should go back on everything we've done so far.
No, no, no. I don't want to drag us back. I'll revisit the video. No problem.
No. We are no. I'm just asking. So since you were there last week and you only missed out some point because of your network, then it's easy to go back. But if you're not there last week, then in that case I will refer you to the last week video. But since you
I
were
was in
here
the
last
class.
since you
I
were here
was in the
last week, I
class.
think we can still explain. That will not take much of our time. Right? Now, in the lease, we computed the lease last week. Now, the essence of this 300 is that they said that, where is this? The interest rate is this. Bola Limited treated this as this lease. Bola Limited treated it as an operating expense because the only accounting entry that the company believes must be made in relation to this asset is 300,000. Now, which means we bought an asset on lease and we recorded the 300,000. I think the 300,000 was it initial deposit or what? No, the
Instrumental payment on
installment for
the
that period. Yes. So the installment payment for that period, we recorded it under P&L account. We put it under other expenses. And an asset is not supposed to be in other expenses, right?
Yes,
Am I
sir.
right, sir? So that's why we need to
Yes, sir.
remove it from our other expenses. Now that 300,000 has been included as part of these other expenses of 2,070,000. So we need to remove the 300
Okay.
because it's not an
Okay.
expense, right?
Okay. Okay. Yes, sir.
So that is that.
All right. Thank you very much.
Then is there any other thing? Let me look at
yes,
my
yes,
Excel sheet if there was
depreciation,
any other thing. Sorry?
depreciation
Depreciation,
on that
fair value adjustment. I mean,
leasing item
fair value adjustment, right?
on leasing
Or which one are you saying?
on that leasing a depreciation on that 1,500 payment on the right of use access.
Yes, depreciation for the year. Yes, will also be
Yes,
there.
which is 1.5 divided by 250 to be there. 250,000 will be being under operating expenses for the
Now that
depreciation for
one,
the year.
I'm coming. Where is that our list asset, right? This our list asset. We have depreciation. I know there was one account. So the list, sir, you asked a question about the 300. This is the 300 here. We put it in P&L account before. So what we did later is that we brought it back. We brought it out of P&L account, credited P&L account, and then debited lease account under balance sheet. Because it's not supposed to be in P&L account. Do you understand
Okay.
that, sir?
Okay. Yes, sir. Yes, sir.
Now, also, we have depreciation for the year. This is depreciation on the list item, which is 215,000 naira per year. We need to include this 250,000 in our depreciation. Abi, let me start writing all of them one after the other as we are saying. How much is the operating expenses for the parent? Is it 2070, Abi?
Yes, sir.
Plus what's this for subsidiary?
810
810, right? Then we said the
minus
300
300
that we have removed, right? Then also we have 250
plus
depreciation.
250.
Abi?
Yes, sir.
Then what else do we have?
Which
What else
is
do we
the
have?
other thing?
Eh? Now this fair value adjustment, I only did for 4
Sir, what
years.
of the sir, what of the depreciation under information number 4 also?
I'm coming to that information for. This depreciation
Okay,
fair
sir.
value adjustment, I only did the depreciation for 4 years, right? I've not known the depreciation for this year, the current year. And that was why I was saying it that this our impairment as well. We can do for 4 years and bring the last one to our P&L account. Let me take them one after the other. This fair value adjustment, maybe it was since 2014.
Yes.
And I did depreciation for only 4 years, which is 2,250. Abi?
Yes.
Maybe this is it here. This is the formula now.
Yeah, yeah, it's for
5,625
4 years.
divided by 10 times 4 years is here.
So
The
where is
one for the
the
Yes.
current year, we have not done it.
Yeah.
Am I right?
Yes,
yes,
So what is
yes.
the division for the year? It will be
I think
5,
562.5. That's 563.
562.5, right?
563 approximately.
So no, okay, 563. I don't want to overstate my account.
Okay, okay.
563, right? Then also our fair value and this impairment of goodwill. How many years did we do? We did for 5 years as well. Whereas I said it that we can do 4 years and bring the remaining 1 year into our operating account for the year, right?
yes, sir.
Do you remember that?
Yes,
Yes.
sir.
So if that is the case, then let's do 4 years here so that we can bring the impairment and expense the one for the year instead of taking it to balance sheet. Since we are still in the current year, we can do the one for the current year, right? So H34.4 divided by 10 times 4. H34.4 divided by 10. Abi, H34.4 is divided by 10, right? Times 4. H34.4 times 4. That will give us 3337.6,
Yes,
right? And that will
yes,
give me minus 3338 because I don't want to approximate. 3338. That means that 3338, I also have to bring it down here. Now, I have added plus 1 here. I should do minus 3337. Do you understand? If I'm doing this one is 563.5, this one 333.5, 3337.5 or zero point 0.6. If I'm approximating this one, it will be 563. But if I'm doing 563, what I'm saying is this. Can you see my screen?
yes,
So if I'm adding plus 562.5 to it, it will give me 3,900.1. Do you understand? Am I right? Do you don't understand what I'm saying? Okay, I'm saying that for our approximation, we want to be careful not to add unnecessary one to it so that we don't have a problem when we are completing our consolidated accounts. And I said
okay.
that, for instance, now our depreciation for the year is it not 562.5 that we approximated to 563?
Yes, sir.
And here I'm saying 562.5. You can see my screen, right?
Yes,
And also the impairment is 3337.6. Am I right?
yes, sir.
If I add it together, it will give me 3,900.1, right?
Yes,
But if I'm doing that 563 in full plus 3338, let's say I want to approximate it to the nearest whole number, 3337.6 will be 3338, Abby. If I add
yes,
it together, it will give me 3,901. I don't want to have this one
okay.
because 3,900.1 will not give us 3,901. Am I right?
Yes,
So that's why I wrote 563 for one and 3337 for the other one. Do you understand that now?
yes, sir.
So that's what I have there. Then what do we have in total? What do we have? Our 333 is an impairment now, I mean, and it's an expense. So that expense, I have to add it. Yes, what do we have in total? Equals to 2070 plus 810 minus 300 plus 563 plus 3337. That gives me 6,480, right?
Yes, sir.
6,480. Wait, oh. How did I get 333 here? Impairment. Is it not for 1 year?
It should be for 1 year.
Oh,
The current year.
the current year will be what? 834.4. The current year is 834. This 3338 is for 4 years. And I
Yes,
need only 1 year here. That's 834.4. That's 834. Not 3,000 plus 834. 834. That gives me 3,977. Abi? Am I right?
Hello, sir. Please, can I ask a question?
Go ahead, sir.
Yeah, under that goodwill computation,
Mm-hmm.
I just want to know, please. Suppose we calculate the impairment for 5 years. Is it right? And if it is right, is it also right to also come and charge it under the P&L? That's
So
for 1 year.
now this is it. If you are charging for 5 years, that means you will not put it in P&L. But why would you do for 5 years when we are still in the current year? The one for the current year, put it in the income statement. Why the one for the previous years that you've not accounted for? Put it in consolidated account. I mean, put it in the retained earnings to reduce your retained earnings. It's just like your audit. Let's say you are auditing the financial statement of 2024 in 2025, and you realize that there are some incomes that you've not recorded since 2022. You didn't record it in 2022, 2023, and 2024. For 2022 and 2023, put it in consolidated retained earnings. We are still in 2024. We are still preparing the account of 2024. So in that 2024 account, just do the right thing for the 2024 account. Put it in the income statement. Ordinarily, it's not supposed to be in the consolidated retained earnings. But because we've not accounted for it, that's why it's in the consolidated retained earnings. So the
Okay,
current year
okay,
is 4 years. I mean, the previous years is 4 years. The fifth year is where we are. So we just put it in
okay.
our income statement directly, where it belongs to.
Okay, how about under that net asset computation? I think
The net
when we
asset,
were
that was
doing
what we
that
did. We
fair
did for 4
value
years as well.
adjustment.
We did for
Yeah.
4 years.
Okay, so how about the remaining 1 year?
The remaining one here is this 563. So this is
Okay,
562.5. 562.5,
yes.
562 divided by 10. That's 562.5. The current year is the
Okay.
that's the 563.
All right, okay.
Any other
Yeah, sorry,
question?
sir. Our balancing figure for the goodwill, it should give us 5,006.4
Where is this one, right?
after impairment, yeah.
Yeah, thank you. Yeah, 5,006.4. No, 5,006 is what I have. Right? Since we have approximated.
Oh, okay, sir.
Shall we proceed now? Shall we proceed?
The impairment of goodwill
Uh-huh.
under consolidated retained earnings.
Okay. We have to change it as well. Alright? Since it is now as 3,000,
338.
yes, done. Any other thing? Any other thing that our account affected? Nothing again, right? Shall we proceed?
Yes, please, for now.
Okay. After the operating expenses, what do we have? We have, where is it? This is question 2. How did we get to question 2? Yeah, we have profit from operations, right? Profit from operation. Our other expenses is minus, right? Am I right, please?
Yes, you are.
It has to be minus, and then we can now say this plus this. That's 8,368. I mean, then what else do we have in the question? Interest expense, right? Do you have any additional information on interest expense? Interest. What do we have here? 570 and 660. 570. The session ends in 15 minutes. We have 570 plus 660, right? Do you have any additional information on interest expense? I think yes. Who remembers additional information on interest expense? There was something on interest. I want to remember that interest expense. There was something on interest. Who can remember that interest expense? Not
Is it this interest rate implicit?
interest
Where that
rate implicit.
300,000
Thank you
was
very
mentioned.
much. Thank
Yes.
you. For lease, question 1. For lease, the interest for the year, which we have here as well in our lease. The first year, right? Now this is it, the P&L account. Interest is 82.5. Right? Yeah. The transaction was entered into in 2018. Abi?
Yes.
The lease was in 2018. A new lease was purchased during the year. So the interest for that lease, this is it here, 82.05. Right? Am I right, sir?
Yes. Yes.
Plus 82.05. That gives us what? Equals to, right? Equals to minus open bracket 570 plus 660 plus 820. Let's correct it, Joe. And what else do we have? Did I say 20? I think I mentioned it 20 plus 82. Yes, what else do we have? That's profit before tax, right? So we have profit before tax. What will be our profit before tax? Okay, then what else do we have? We have income tax, right? Income tax expense. What's our income tax expense? 810 and 360. Do you have any additional information on income tax expense? I'm not sure. Eh? I'm not sure. I'm not sure I had anything like that. 810 plus 360.
Yeah.
What do we have?
Yeah, that profit, that associate profit,
That what?
that profit on associate, is it not coming to this kind of profit of associate?
The share of profit of associates, right?
It's not, is it not coming to this?
No, it's not being income statement. It's being financial position.
Okay, sir.
Yeah. 810 plus 360 will give us minus 1170. Right? It's minus 1170.
Yes, sir.
Okay. So what do we have? What's our profit for the year now?
5,886.
886. 5886. So what else do we have? That's all. So this is our profit for the year. Okay. Now let's go into our consolidated financial position. Let me take it again. Let me steal from here again. Consolidated financial position. Let me also shorten it. I can break it into, so while I do this, merge it here. Shall we proceed, please?
Yes, sir.
Okay, for statement of financial position, yes, what do we have?
Okay, people plan, non-current asset, property, plant, and equipment.
The first thing here that I see is NCA, non-current assets, right? So for NCA, what do we have under it? We have our PPE.
10,000,
And what will be our PPE?
10,350 for the thing.
10,350.
12,180 for the subsidiary.
12,180 for subsidiary. What else do we have?
We
Eh?
have that
Fair
that
value
that
gain.
we have value the property
Fair value.
5,625. Yes, in additional information for
Okay, that's fair value adjustment, right?
yes, yes.
So we are adding it 5,625. What else do we have? We have
Under
depreciation on it,
depreciation.
right?
Depreciation
Depreciation on
on
it is 2,250. I mean,
yes.
what else do we have? Any other thing?
Sir, please, is it the accumulated depreciation we are bringing here
Yes,
or
sir.
just for that year?
Accumulated
Okay, the
depreciation.
accumulated. Okay.
And what else do we have? What's the depreciation for the year? Hello? What's the depreciation for the
Hi.
year as well? Because this is accumulated depreciation for 4 years. What about the depreciation for the year?
That was
For the
250.
On that list, no. Have we done for lease? Have we done for lease? What's the depreciation for the year on this asset?
it
Is it
should
not
be it
560?
should be yeah,
Abi?
it should be five that 5,625 divided by 10 now. You just said for 10 years.
Please give me
Sounds
1 second. 1 second, please.
mm, 2015.
Hello? Orí pé mò ń kọ́ ti question lórí àti ṣì ń pè mí padà. Orí pé mò ń kọ́ ti ọ̀dẹ̀ ń pè mí padà. Mo wà ní class tó yẹ kí n máa
Get
kọ́ ti ẹ̀ náà.
1,200.
Wàá dẹ̀ send me message. Ẹ̀mí tí check ẹ̀ mi. Má wọrí tí ní bá tó bá wà important máa pè ẹ̀ padà. Mo fẹ́ sọ nǹkan fún ẹni tẹ́lẹ̀ ni but time ti lọ báyìí má wọrí. Má délé àmọ́ sọ mo wà ní class ni. Mo dẹ̀ ń kọ́ ti ọ̀dẹ̀ ń pè. Ẹ má bínú. Hello, sorry about that, please. Can you hear me, please?
Yes.
Yes, sir.
Okay. Yeah, so we are talking about we've taken a depreciation for all the 4 years, right? Which is 2,250 on this one, right? Do we have any other depreciation? Depreciation for the year on that list item. No, this one is it's not the list asset though. It's the fair value. Abi? Fair
Yes.
value adjustment. Right?
On the list, it was 250,000 we used on the list assets.
The
That's
depreciation for
1.5 million divided by 6.
I don't understand. What do you say, Ma?
Are
I
you
didn't get that.
asking for the depreciation for the list
The
assets?
depreciation on the fair value adjustment, this 5,625 is fair value adjustment, right?
Yes.
Then 2,250 is depreciation up to the previous year. We've not done depreciation for the year, right? Depreciation for the year is in income statement, which is 563. Am I right?
Yes, sir.
Does anyone understand what I'm saying?
Yes, sir.
Yes.
Depreciation for the year is 563, right? That means we need to remove the depreciation for the year as well, because the assets will continue to depreciate every year. Am I right?
Sure.
Then what else do we have? What about the list item? This one is for fair value adjustment. What about the depreciation for the year on the list item? What's the depreciation? 250 or what?
250.
Maybe it's 250
I
now.
think
It's 250.
I
That's
think
what I said. 250,000.
Okay.
250,000 and then that asset. I think we are going to add it
Yes, what's the value of the leased asset?
1,500.
It was 1.5
1,500,000.
million divided by 6. That's 250,000.
Okay, so the leased asset is 1,500, right? Minus
Minus
depreciation for the
250.
year. Minus
Yes,
depreciation for the year is 250. Abi?
yes.
So what will that give us now?
27,155.
Please, who doesn't understand what we've done here? 10,000 for parent, 12,000 for subsidiary, right? Now we have a new asset of fair value adjustment from here. Here. The fair value adjustment is 5,625 and the depreciation is 2,250. But this 2,250 excludes the depreciation, the current year depreciation, right?
Yes,
So this is the 5,625. This is the 2,250. The depreciation for the year is 563, right? Then also we
which we are
bought a
taking for
leased
the same
asset
year.
of 1,500 and the depreciation on that leased asset is 250,
250.
right? So what do we have in total?
27,155.
27,155.
Yes.
Okay. What else do we have? Someone else should confirm this. One, can we have 155? No, I don't think so. This is 0, this is 0, this is 5, this is 3. So we cannot have 155. It cannot be 27,155. 10,350 plus 12,180 plus 5,625 plus, no, minus 2,250, right? Plus 1,500 minus 250. Oh, 27,155.
27.
27,155. 350.
Yes.
0 plus 0 plus 5 minus 0. Okay, minus 3. It should not be. Ah,
It's
uh,
27,155.
can someone else confirm, please? I don't know why we're having 27,155. 10,350, 12,180, then 5,625 minus 2,250. I mean,
Yes, sir.
minus
Plus.
563.
I
I
am
got
having
26,592. 26,592.
592.
Yeah. 26,592.
It has to be 2. 2 has to be there. 26,592. Wait, what did I put here? 10,350 plus 12,180 plus 5,625 minus 2,250.
Well, sir.
Okay, we did not
Sir.
include minus 563.
Hello, sir.
Yes, sir.
That 563. Are we including in the financial statement again? I mean, financial position.
That
Since
563,
that
you
we
want to
are
get what it is. The
since that we
563
are
is what?
charging it to routine and
Impairment. 563 is impairment. That's why it will not be there. 563 is impairment. That's for goodwill. Do you understand, please? This 563, where is it? No, it's fair value adjustment now.
no fair value adjustment is 2,250.
And
Okay.
the accumulated depreciation up to the last 4 years. Don't forget, every year it is reducing by 10%. Do you understand? The fair value
Sir, class
adjustment.
will go off any moment.
And we'll come back immediately. We'll come back immediately
Okay.
as well. Right? Now, 562.5, that's the depreciation for the year, for the fair value adjustment. Are we together, please? Oh, I'm not sharing my screen. So we've done the what's it called? Minus 563 was 1,500 minus 250. Honestly, I still don't know how this one. Okay, I did not include this 563 to it, and I've seen it there.
Hello, sir.
Yes, sir.
Hello, sir. Please, is there a way you could just write in front of all these figures, as in what they really stood for?
There is no way
So
I
that
can write
probably
it.
when going
There is no way. There is no way. You just have to follow the question from the beginning. There is no way.
so that when going through this, we don't have to revisit the video to know where these figures are coming from.
Honestly, there is no way. So I can just put it that this one will be in the fair value adjustment now. Where did we treat it? We have treated it in our uh, consolidated retained earnings, are we? Right? And our PPE.
Yes. Net assets.
Sorry? We have it as in our consolidated retained earnings and also in PPE. Right? This one also will be there. Then goodwill. Honestly, we can't start writing it for all of them. It's just for us to identify them. This one, this one, this asset. There is no way I can.
I don't really mean this place you highlighted. I mean by the side here that you wrote all the figures 1111
That's what I'm saying.
by
There is
your
no
right
way
hand
I want
side.
to write it. So if I'm to start writing all of them, where will I start from?
Maybe like in front of this 10,350, you can just say parents
I should have all
cost.
of this stated like this. I'll die because I have to do the same thing for all of these. All these figures in our revenue, I have to bring them out for this one, for this one. So
Talking
No,
of
here,
working.
I mean just that PPA alone,
we have so
because
many
it's
of,
somehow
sir,
complicated.
we still have so many that we have a long line like this for. We still have so many. So you're in class, right? Anytime you have a question, you can always reach out. Anytime you have a question and you don't get it, just reach out. All right? Yes, I'll be available for that. Please, let's move on. It's already 8:30. All right? The class recording has started too. Now, what's the next thing we have in our consolidated accounts? We have investments, right? Now, our investments, we have investment in associates. So let's compute for investment in associate. Don't forget anything that like investment like this, we have to completely eradicate it, right? Instead, we bring in the investment in associate. So what's the investment in associate? What's our investment in associate? What's the cost of the investment? How much did we buy our associate?
1 million.
On January, we acquired 225 in AZ, 6 million naira. Investment is 6 million naira.
6 million naira.
Yeah. 6 million, right? Since it is in thousand, 6,000 plus. Let me write 6 million. So that people will not be looking at where is it. 6 million plus, right? What's our post acquisition profit in AZ? Where is the profit? 1050, right?
Yes, sir.
Uh-huh. I think we have that post acquisition profit now, 315. So 315 will be in the investment. The other part will be in what's it called? Retained earnings. Right? Where is that retained earnings? This 315
Yes.
plus 315,000. So let me write 6,000 plus 315. Uh-huh. So what will that give us? 6,000, 315,
6,000.
6,315. Have we?
Yes.
Then what else do we have? We have goodwill. Don't let us forget our goodwill.
Goodwill.
Sorry, sir. Please, can I
Yes,
ask a
sir.
question,
Go
please?
ahead, sir.
Please, why are we bringing this investment in associates as a line item in the consolidated
What do you suggest we
financial
do?
statements? No, I'm just asking. I'm just asking.
So ordinarily,
As in, if we
investment.
can pull that of the associates, why are we not also including that of the subsidiary?
So the answer is very simple. For subsidiary, you are consolidating. For associate, you are not consolidating associate. If you look at my income statement, all the information for associate, did you see me put it there?
No, sir.
That's because we are not consolidating associates. We only want to see our interest in associate and the profit we got from that investment. How much
Okay.
did we pay the associate? 6 million. What is the value of our investment as at today? 315,000 has added to it. So 6,315,000, that's our investment in associate. Now, if you look at investment account itself, we did not pick this investment value. This investment value of 29,250, we did not pick it.
Yes.
Do you understand?
Yes,
Because
sir.
that 29,250 should be the composition of the 6 million and the amount we pay for this one. 23,250 plus 6 million. Right?
Yes. Yes.
29,
That's
29,
29,250. That is the 29,250 here. Where is it?
Okay.
29,250 here.
considering
Investment in
that.
subsidiary has to be completely removed because the
Okay.
equity of subsidiary is also completely removed because we are
Okay.
consolidating it. But out of the associate, we will not remove it,
Okay.
right? Because we are not consolidating it. We
So
need to
where
show
did we
that
get? Okay, where did we get that profit that we added?
it's
315.
in our post-acquisition profit. Maybe this is it. Share net asset and date of acquisition. This is it for AZ.
Okay, 30%, right?
Yes, sir.
Oh, okay, okay.
30%.
All right. All right, sir. Thank you.
Then what else we have? Our goodwill. What's our goodwill, please? Okay, no, I think we've calculated goodwill now. What's our goodwill? 5,006. 5,006, right? Any other
Yes,
thing here? Do we have, okay, that's for our non-current asset. Yes. How did the question give it to us?
current asset
Non-current
now.
asset is added together to current asset, right? I just want to be sure. So that means here I have this, right? For my current assets,
Inventory,
we have inventory,
10,500.
10,500, plus what?
8,910
8,910,
minus unrealized profits
Yeah,
195.
195.
minus 195 unrealized profit. Thank you, sir. And that gives us what? 10,500 plus 8,910 minus 195. That gives me 19,215, right?
Yes, sir.
Then we have receivables.
Receivable.
I think I saw inventory to be inventories. Okay, so for receivable, what do we have?
15,000 for parents.
15 for 200, right?
Yes.
Now we have 15,000. 15,000, right? Plus 4,200, Abby?
Yes.
Minus our intercompany transaction, our receivables of 900 that we have included in the 15,000, Abby?
Yes, sir.
So minus 900. That gives us what? 19,200. 19,200 minus 900. That's 18,300. Right?
15,300.
We have
Yes.
cash and cash equivalents.
5,625.
5,625
Yes.
plus
1,875.
1,875 plus the 300 given to us.
Yes. 300 of that cash.
Yeah. 5,625 plus 1,875 plus 300. 7,800. Any other thing?
Yes.
No.
That is a total current asset now.
Yeah, total current assets. So I'll have total current assets and total asset as well.
45,315.
45,315, right? This
Yes,
is
sir.
total current asset. Then total asset.
83,791.
Where is my this of this? 83791, right?
Yes,
Okay. Yes, what else we have, please?
equity and liability.
Equities and liabilities. So for equities now, what's the equity? We have ordinary share capital, right?
Yes, sir. 28,125.
28,125. It's only for the
Okay.
parents now.
Yes, only for the
Uh-huh.
parent.
Only for the parent. 28 because the 7,500 does not belong to us. It's for
That the consolidated center.
uh, 28 125, I mean.
Yes, sir.
What else do we have?
Reserve. That
Okay.
is calculated in our working note.
Reserve, I mean.
The
Or we
calculated
have it
one.
as our consolidated retained earnings, I mean.
Yes, sir.
Yes, sir.
This auntie, you just speak that yes, sir. At what should I call it? I don't know. As at when I'm expecting a response. Let me put it that way. 18,045, I mean. Right? Do I have it as minus? No, 18,045. Right? Are we there?
Yes, sir.
And what's our NCI? NCI is what? Oh, where's my consolidated
Calculated in
NCI?
the working note.
6431. 6431. Right? Any other thing? That's all about that. That's total equity now. Right? What do we have for our total equity? It gives me 52,601. Abi? Right? Total equity. What else do we have? Non-current liabilities, Abi?
Yes,
That
sir.
one does not have anything.
4,500 plus the 3,000 is the 7,000.
4,500 plus 3,000.
That is 7,500.
That gives us 7,500. And what else do we have? Any other liability?
This lease obligation.
Thank you, sir. Our lease obligation. What's our lease obligation now?
1,050.
Where is our lease?
The previous class working
Um,
1,052.1.
let me see where we have that 52 point. It was from 1,500, right?
Yes,
And then from that 1,500, we have depreciation removed, right? In our lease obligation. This is it.
I think from that table, that amortization table.
In our amortization table, what's the value of our lease? I'm talking of the second year.
Yes, 1,052.18. That is what was supposed. Maybe
Are you sure?
1,052.
Yes, it's
Yes,
1,052, 18 kobo.
Why? Why do we have 1,052 kobo?
It's in the second year now.
What we brought forward in the second year is 1,282.05. We deduct installment
Yes.
payment. We now add
Now, are
interest.
we in the first year or in the second year of our lease?
Second year. That's
Second
When
what
did we
we are
buy
using.
the lease?
Sir?
When did we buy the lease? The lease was bought in 2018,
year. 2018, yeah.
right?
Yes.
Yes.
And this account is at the end of 2018.
Yes.
So I don't know if you understand me. The lease was purchased in 2018.
Yes. And meaning that we are going to use the first year now. If we
Sorry?
are prepared.
Okay, now this is it. Okay,
So,
okay.
so I think that in that amortization table, we normally calculated not the one that we were supposed to record in the non-current asset order, I mean
And
non-current
currently,
liability order,
exactly, that's exactly
the
what I
second
want you
year.
to bring out. Now, no,
And
no, no,
second
no.
year.
Now,
No.
everything, the difference between our third year and our fourth year will be in the current liability.
Yes,
Yes.
sir.
Do you understand? Now, non-current
Yes.
liability is anything above 1 year.
1 year, yeah.
Yes. Okay.
Do you
Yes.
understand that now?
Yes.
Now, you see this liability here, the difference between 1,052 and this 1,282, right? This
Yeah.
one will
Yes.
be in our current liability, which is 300
Current
minus
liability. Yes.
17.13. It will be in the current liability.
Yes.
Do you understand that, sir?
Yes.
And
Yes, sir.
sorry,
I understand.
is it not
This, that is
between the
300
first?
minus 70. This 300 minus 70 is
Okay.
a current liability because we will pay it before the end of the next year.
No, no. I think we are going to consider the last column.
No, no, I'm coming. At
Okay.
the end of year one, this is the value of this is the liability on our lease,
Yes.
1,282, right?
Yes.
But on that 1,282, we will pay 300, right? And
Yeah.
we will have an interest that will add to it to be 70 naira. 300 minus 70 is this 300. We are paying it in the next year.
Yes.
And if you are paying it in the next year, it means you are paying it before the end of the year, which means the installment will be done within 12 months. So that means
Yes.
this installment of 300 and interest, this 270 now, if you net them, 300 minus this will give me 270, I mean, or you
Yeah.
say that 1282 minus this. The difference between them will be paid within 1 year. That means it is a current liability.
Okay.
But this 1052 is a non-current liability,
Yes. Yes.
right? So that is why our 1052 will be in our non-current liability. So that was what I
Yeah.
was asking. Are you sure?
Yes. Yes. Yes.
Yes, sir.
I just want us to get it now. We are not just assuming because ordinarily someone else will look at 1052 is at the end of second year now. We purchased this asset here, and this is the end, this is the date. As at this date, as at the date we are preparing the account, 1282 is the total liability, both current and non-current. 1282 is the total liability on that list asset. But out of the 1282, 270 will be paid next year in net. That is, we pay 300, right? They give us additional interest of 70. That's 270. I mean 230. So that 230 is a current liability.
Yes. Yes.
Do you understand that now? And
Yes,
that's
sir.
just what I want to bring out. So 1052 is our non-current liability. 1052. Right? That
Yes.
is under non-current
One.
liability. Do
Where
you
the two?
understand that?
Yes.
Uh-huh. So
Where
what do
the
we
two
have there now?
current liability?
Which now give us 8,552. Abi?
Yes.
So this is our total non-current liabilities. Non-current liabilities. Then also we have our current liabilities. What's our current liabilities in the question? We have trade payables. Right? What's our trade payables in the question? 20,250. Yes, sir.
20,250.
So we have 20,250 plus what? 1515. What did I say? 1515. Abi?
Yes.
Minus what? The
230.
600 that he added. This 300 in our liabilities, in our assets, receivables. This minus 3, I mean minus 6, minus 900 plus 300 will give us what? Minus 600.
20,250.
20,250. No, we cannot have 20,250 again now.
That is 600.
Equals to 20,250 plus 1515 minus 600. That will give us 21,165. All right. Then what else do we have in the question? Income tax, current income tax. What's the current income tax? We have 975 and
Current
300
liability. The one we are talking about.
975
plus
plus
300. We don't have any additional information on income tax at all, right? That's
So
1275. Abby?
that current liability is supposed to be there. The current liability under that list.
No, we have lease as well now. We have lease as our current liability. I mentioned it before. So I just want to pick the ones in the financial statement first. Then we now have lease again. Lease obligation. The one that is for current liability will now be, let me
230.
bring it, 300 minus 70. So that is 230. Any other thing?
Okay, now finish.
Please,
Okay.
sir, can I ask a question?
Go ahead, sir.
Please, the profit for the year we got from the income statement, does it have any impact on the consolidated financial statement? That's like maybe under retained earnings.
No, we've considered it as well. We consider it as post-acquisition profits. The profit
Okay.
for the year is also part of the post-acquisition. Don't forget, when we're picking our retained earnings, the retained earnings also has net profit from the income statement. You always be taken to retained earnings. Do you understand?
Okay, all right.
When you're doing
Yes,
your
sir.
balance sheet, after capital, add retained earnings or add net profit. That net profit is what forms part of the retained earnings. So it has been included. All right. So this is our total total current liabilities, right? Now let's do our total equity and liability. Equity and liability will give us what? What is our equity? Ordinary share, which is this, plus total non-current liability plus this. That gives us 83. Wow, we have a difference.
Of what?
We have a difference.
It's 32. 32.
32.
Yes. Sir.
The difference is 32.
Yes, sir.
No, it cannot be 32 now. 823 minus 791 cannot be 32. 823 minus 791. It's 32. So where is that 32 coming from?
I don't really know.
32. coming. Let's look at our accounts again. Was there anywhere we mentioned any 32 at all? Any 32 at all in our account? Was there anywhere we mentioned any 32 at all?
Mm.
Any 32 at all?
Or maybe can
I'm
we
coming.
just carefully check our additional information?
I'm coming. I'm coming. I'm coming. What is this thing here? Wait. This minus this.
That is exactly what I want to say the other
This
time.
is 229.
It should be 229 point something.
Did I not do minus? Yeah, that's 229. Mm. 229.
Yeah.
And this one is 270. Abi? No, 230. Is that not what you got? Yes, now 230. 70 minus this 230.
That one is 70.13.
You mean this 70.13?
Yeah.
Where is our 32?
And it's going to give us 229.87.
I'm coming on.
Okay.
For a non-current asset is 1.5, Abi. That means we have 1,250 as our net asset. Current, non-current asset, the net book value. Right? Then liability as well. These are liability
Yes, for the
for the
current.
first year, and this is for the second year and for the first year.
And so the difference between the two would form our current liability.
That 32. Where is our 32? Where is that 32 coming from? Honestly, I don't know.
Maybe it's error of computation, sure.
How? How? Where can we have 32? I'm trying to see it. Even this one minus 82 minus this is 12, not 32. 82 minus 57 is also not 32. It will be 20 something, 27 or so.
25 now.
25, bah?
Yeah.
Not 32. See why I never enter like this. Yes, go ahead, please. If you have anything to say, or is it the next? We have 15 minutes to end this class. We'll end the class in 15 minutes time. Okay, so let
I
us do it
think,
this way. Yes, I'm listening.
hello, sir.
Go ahead, please.
I think that error must have come in area of that amortization
This amortization here.
you.
Eh?
I think that error might have come in that area.
Here. Which one?
I don't understand.
Which one? Which of the amortization?
We
Don't
should calculate our this interest implicit.
Implicit interest.
Maybe we should calculate it back. Sha.
No, we're very sure about that. Maybe this is
it's
it
correct.
here.
That one is correct.
It's
Okay.
correct. Okay, I'm coming. Okay, I have seen it. I have
Okay.
seen it. I've seen it. I have seen the 32.
Okay.
I've seen the 32. So let's look at it this way. At the end of year one, we have 1,282 as our closing balance in liability. Abi?
1,000.
Yes.
What?
Yeah.
282 as the closing balance of our liability.
Yeah.
Am I
Point
right?
zero.
Yes.
Yeah.
But the
Yes, sir.
asset is showing that our net book value is 1,250. That's the
Okay.
32. So liability is showing
Okay.
1,282. Asset is showing 1,250. That's the 32.
Mhm.
And
Okay.
ordinarily,
Okay.
do you understand? Do you understand it now?
Yes,
Yeah.
yes, sir.
So that difference is on the liability side. So our liability has increased by 32. Now, which side is more? Which side is more? You can see that this liability,
Liability side.
it is one that is more,
Mm.
right? It has more liability here, 1,282, and here we have
Yeah.
1,250 under the assets. So
Yeah.
that's the issue. So what we have to do is that, what do we do now? We remove that 232. I mean, from that 32, we have to remove it from our liability, from our
Liability.
lease obligation.
Okay.
But we not remove it from lease obligation. It will not change our lease obligation. But how do we remove it now? I think that 32 now should affect
Be
our
reducing the
income
profit.
statement. You have to write it off into the income
Reducing the
statement.
profit.
It will reduce
Abi?
our net profit, Abby.
Yes, retaining any.
It will reduce our retained earnings profit. Yeah.
Yeah.
Yes, it will reduce our retained earnings. That's the 32. Do you understand that now?
Yes.
So
Yeah.
let me
Yeah.
bring it again.
Please, can you
This,
come again, sir?
yes. Now, the value of liability at the end of year one is 1,282, while the value of asset at the end of year one is 1,250. I think I'm done with this class. Do you understand, sir?
Yeah.
Yes.
1,282 is the value of liability. 1,250 is the value of asset. That means the difference between them is 32.05. That 32 will affect our retained earnings. So that means we
Yeah.
need to reduce our retained earnings by that 32. All right? So let
Okay.
me just bring it as a reduction in retained earnings. So reduction in retained. That is the difference. No, not let me write reduction. Difference in lease liability, lease obligation, and NBV, and that is 1,282. I mean,
Yeah.
Yes.
minus 1,250, and that gives us what? 32
So,
minus 32. So with that minus 32 now, we have 18,013 for my retained earnings. Where is it? Where is it? Where is it?
Don't know.
Retained earnings reserve 18012. 18,032. So 1,790 and 1,791. The difference is one. Where is our one?
that one due to approximation.
Okay, it's due to approximation. I thought I did 32 here in my retained earning. Where is the retained earning? Consolidated retained earnings again.
And that 182, 1,282 is
012. Okay, 18013. I wrote 18012. It is 15013. Thank God for this. I guess we are
Hallelujah.
done now. 1791 and 1791. Any question?
No.
Please, help us see the solution on the pattern.
Sorry?
The solution, so that we'll be able to go through it again.
So this is what I'll do. I want to promise you one thing. Someone should remind me on Monday. If by Monday they've not updated the account, the book, and then send it to you, right? Both the one for last week and this week, I'll send it to you. But right now, I'm
Okay.
sending the reports, the material to them again so that they can consolidate it. I think they have a certain format they want it to look like, and that's why they don't encourage us sending it like that, so that they can go through that format and customize it with the center's logo, right? So it becomes the property of the center. I think that's why. But don't worry, I'll speak to them and I'll ask Madam Christie to hasten it up. All right. So we're hanging
Okay.
our boot here tonight.